My name is Fiona Yang, a fund manager at Invesco. I have over 10 years experience in the finance industry, and I joined Invesco about 5 years ago. I have been recently promoted to the co-manager of Invesco Asia Trust, and I am very excited to start co-managing the fund alongside the main fund manager Ian Hargreaves. Given my upbringing in China and educational background in Singapore, I do want to bring in more of my local knowledge to the trust's investment process. So for 2022, I do think the Asian market offers attractive upside as compared to the global peers for its growth prospect and undemanding valuation. A near-term growth is supported by strong demand for Asian export from the rest of the world and China's policy cycle moving from a tightening phase to an easing phase. Valuation is very attractive. Asia ex Japan is trading at 14 times price to earnings ratio and 1.7 times price to book ratio, offering a significant discount to global indices. Furthermore, our trust's disciplined valuation approach has resulted in an overall portfolio's price to earnings ratio at merely 12 times and price to book ratio at 1.5 times. Our positioning in India is a very good example to illustrate how we meet our investment objectives. We increased our Indian exposure when COVID first hit back in 2020. Our long-term investment horizon allowed us to take the opportunity to invest in undervalued companies in India. In 2021, India has become one of the best performing markets in the region. Looking ahead, we continue to like domestic cyclical names in the infrastructure and capital goods sector because we expect CapEx upcycle in India to support our portfolio companies' earnings growth. We also find value among financials because credit growth could improve to double digits over the next 3 to 5 years, driven by underpenetrated segments like retail and small medium enterprises. So we have a three-stage investment process, starting with idea generation, followed by fundamental analysis, and before investing in the company, we generally have vigorous discussions in the team. In the first stage, we oftentimes identify undervalued investment opportunities through being contrarian. I want to use our investment in a Chinese wind turbine maker in early 2021 as an example. The sector was out of favor as investors were very concerned on the Chinese government's removal of subsidies. The company we were interested in was trading at a significant discount to the European peers. Moving on to the next stage, we did in-depth analysis of the industry and the company itself. We came to the conclusion that China's carbon neutrality target could actually drive structural demand of wind turbine, and our investee company has the right technology to continue to gain market share. At the final stage, we discussed the idea at team meetings, resolved the final inquiries, and engaged extensively with the company's management, research analysts, as well as the industry experts. Over the past year, the wind turbine maker we invested in has enjoyed rapid revenue and order growth, delivering strong share price performance. So the board has agreed to an enhanced dividend payment policy with the aim to pay annual dividend equivalent to 4% of the company's NAV. The dividends would be paid from a combination of revenue as well as capital reserves. I just want to highlight that the change in dividend policy has no impact on the portfolio management strategy. I want to reassure you guys our trust has been well resourced throughout the COVID period. We have a new member who joined the team. He was born and raised in China. He will be spending majority of his time focusing on the Chinese market, including A shares. As for the day-to-day running of the fund, advanced IT infrastructure enabled the team to work from home from day one of the lockdown. and virtual conferences have replaced physical meetings. This enabled us to easily access companies in Asia. And I would argue that it is even better as compared to pre-pandemics, as a company's management are just a click of button away rather than 10 hours flight away. We are currently planning a virtual road trip to Asia for the board of directors in the coming months. And before I go, I just want to highlight that as long term investors in Asia, we're confident on the future prospect of the region, driven by a favorable demographic trend and the entrepreneurial spirits of local businessmen.